Now to spotlight Tesla. Shares under some pressure ahead of earnings tomorrow. Joining us now for insight and perspective, we've got Seth Goldstein, equity strategist, energy and resources at Morningstar. Seth, thank you so much for joining us today. All right, we know that we're hearing reports of production delays when it comes down to the stripped down Model Y. But before we get into that, I want to hear what your expectation is going into earnings tomorrow.
Well, we know deliveries already declined 13%, but then we saw a massive growth in the energy storage deployment. So I'm expecting we see automotive revenue down, likely due to the lower deliveries. We also see higher unit cost. The cost of goods sold would be up versus the fourth quarter. So likely Tesla is going to see lower profits year over year. But I'm more interested in what the outlook's going to be for the rest of the year, and what they're going to say as far as the new affordable vehicle, the Model Y refresh, and the autonomous driving testing launch coming up later this year.
You make a great point about looking forward to wanting to hear what the timeline is going to be. Often when Elon Musk comes out, he gives an aggressive timeline for different things, whether it's, vehicle or the AI, robots, et cetera, and then he has to adjust the timeline. How important is the launch of this affordable vehicle and kind of sticking to a timeline, especially if we get to a new timeline?
Well, the closer we get to production, I think the more important it is for Tesla to hit the timeline, or at least give us an updated timeline and explain why the new timeline is going to be hit. When things are years away and it's 2, 3, 4 years out, I think Elon Musk starts to, talk about his long-term, 5, 10-year vision for a new product. But when you're talking about an actual new vehicle that's coming to the market, that's when I think it's more important for Tesla to show that they have a firm date, or at least a general time frame when they're going to launch a new, more affordable vehicle, so that they can offer some clarity on the direction of deliveries, or if it's going to be the robotaxi, a timeline for when that can become a service and not just a product concept anymore.
Oh, that's a great point. Now, let's say, so we're seeing reports from Reuters that the timeline is now, it's a few months out. And the expectation was this would come the first half of this year. So a few months out puts us a little beyond the first half of the year. What if there are further delays? What does that indicate to you?
Well, it indicates that potentially they're being impacted by the tariffs. For a more affordable Model Y, one of the ways to get the cost down is to import more parts from a market like China, where Tesla already has an operation or has good relationships with key battery suppliers like CATL and BYD. That's a way to reduce their unit costs and offer a more affordable version of the Model Y while maintaining the platform. Perhaps the tariffs announced on Chinese imports would impact that supply chain. So maybe Tesla wants to take a little more time, revamp their production outlook for the vehicle, redesign it, and make sure that maybe they can qualify for the Inflation Reduction Act credits, and they're not going to be paying an abnormally high import costs for key pieces of the vehicle.
We've seen some heavy impact to margins for Tesla recently. Part of that has to do with some of the pricing that it's had to do. Part of it is, just not selling as many vehicles. What do you need to see, or what are you expecting to hear from Tesla in terms of a shift to improve margins?
Well, I think Tesla needs to show their costs to continue, or their plan to continue to reduce unit production costs. They were going to do a new design process. They were going to continue to try to reduce content like rare earth materials, the number of semiconductors in a vehicle, the amount of copper wiring in a vehicle. And these can all slowly reduce the cost to produce a vehicle over time. But I want to hear Tesla's plan, how they're progressing on this, and what their outlook is. And going along with that, how they're going to be impacted by the tariffs, because Tesla has a key decision, like many other automakers who are importing pieces or a lot of their vehicle content, and that is, do you raise prices to consumers and potentially sell lower volumes, or do you eat some of the costs, try to win market share, and make up the higher costs through greater sales volume? So I want to hear what Tesla wants to do, and I think Tesla management's plan for how to deal with the tariffs and how to keep lowering the unit production costs will give me better clarity into their margin trajectory going forward.
Let me ask you this. There have been calls for Elon Musk to step away from his political activities because there is, it seems that you could see the case that it's impacting shareholder views on this company, and his political activities are affecting the outlook for the company and the market performance of Tesla. How do you think that will continue to influence investor behavior if he continues to have this kind of political role as well?
Well, I think it's going to depend on how Tesla's underlying results perform. If we see the new Model Y, the refreshed Model Y that's now available in the three key markets, the US, Europe, and China, in Q2, if that helps to improve deliveries, then I think we can not worry as much about the political risk to Tesla's brand turning away consumers. We could say, okay, many consumers perhaps delayed the purchase of a vehicle because they wanted a new Model Y. They didn't want the old version. But if we still see Q2 deliveries falling 13, 14, 15%, and we're still seeing, a delayed outlook for the more affordable vehicles, so it doesn't look like deliveries are going to come back anytime soon, then I think we can start to say, maybe Elon Musk's political activities are turning more consumers away from Tesla, and that's creating some brand damage. But I think the second quarter is going to be very telling because the new refreshed Model Y, the Model Y had not been refreshed since it came out. So having a new version of that, I think, is going to excite many consumers. But that'll tell us, are consumers staying away from Tesla because of Elon Musk, or were they just waiting for the new vehicle?
All right, that is a good question. All right, right now, shares of Tesla down more than 6% ahead of earnings tomorrow. Seth, great insight. Appreciate your time with us today. That is Seth Goldstein, equity strategist, energy and resources at Morningstar.